Welcome to Momentum Monday. Today is Sunday, December 29th, the last show of the year. Howard, look like you're wearing something from your grandma.
Lulu.
Oh, Lulu.
It's cold here, and I think I weigh less than you. Ivan, what's the weigh in this week?
My weight?
Yeah,
175. Less than me. Good job.
I'm 171, but somehow still 80% body fat.
Okay, that's a unique combination.
Did you shower today? I haven't. Your hair looks a little flat.
I did. I just showered. Yeah.
Okay, that's why you just put a
I
little.
had a workout and a shower, so that's why I look different.
F45.
Yeah.
Attaboy.
It works for me, so.
I can't. I still got to recover. I still got my wound, my stomach wound.
Yeah, be patient.
All right. Sorry, everybody. I'm a little cold. Ivan's going to, let's get to it.
All right. We're looking at the chart of the S&P 500 on Market Smith.
Yep.
We continue to make new highs on, at least in the large cap indices. The small caps are also trying to get their Russell 2000 working on the right side of its new base.
Mm-hmm.
Nasdaq 100 also new all-time highs.
Mm-hmm.
And
Nasdaq 9,000, baby.
Exactly. Yeah. We're almost at 10,000, which probably will hit at some point next year.
Come on, I was calling for 10,000 before anybody.
That's true. I remember that post. Yeah.
You were still living in Bulgaria. You were 11.
No. It was a few years ago, and I remember that post.
Now I got to do Nasdaq 20,000.
I remember thinking that this guy is crazy, but then when you do all the calculations on compound interest, it's not really actually that extreme.
It's not. Nasdaq 20,000 could happen in this run. I mean, but let's get to it. Let's go around the large caps. Because I think two themes Ivan stand out, and I want to go through them with you. Is China, US. We should go through some of this and what's not working. So first of all, what's not working? I think that energy underperformance is crazy. There's so many
time frame, yes.
So many old people, that invest in the stock market, in the 70s and 60s, 70s, 80s, and 90s, whatever that terrible generation of cranky old people that hates everybody and wants to see the world burn. They continue to just mess around trying to call a bottom in energy. So what's great is they're missing out on all this. They're still picking individual stocks, and they're picking value stocks and energy stocks. So good luck. Yeah. Ivan, I had a chart of the last 10 years. Do you have that I shared with you?
Yeah, just 1 second. Let's see.
Really unbelievable. Because energy still is a big part of the S&P, but if you look at the underperformance, wow, those.
Just give me a second. Here we go.
Wow, you don't pay for a premium stock twits? You got to take all the ads?
Yes, I do. So sorry.
Bastard. All right, I got to fix that. Okay, so you can see last decade for energy and Bulgaria. Has Bulgaria had a good decade?
I think so. Depends on the viewpoint.
Okay. There's no better straight man in finance. Okay, so negative 23%, Jesus, for crude oil. And
that might change, Howard, though, because for
it might change.
One of the
and Trump may get impeached, but come on, you're not trying to waste time here. If it changes, there'll be plenty of time to get aboard. I'm getting more emails from people in their 70s who are friends of mine and LPs saying gold and silver and energy are going to be top 10% asset class next year. So one of these years they'll be correct.
Very possible, actually. I think one of the emerging trends right now is the weakness in the US dollar. And if this trend persists, and typically currency trends persist, we might really see a comeback in gold and basic materials next year. We might.
You got to keep your eyes. You got to keep your eyes open, of course.
Not sure, of course, but look at this big breakdown in the US dollar. Even though now it's kind of back to potential support. It's definitely something to. It's
That makes
amazing.
sense to me. That makes sense to me. The Trump was starting to brag about how strong the U.S. dollar was. You know, we're only so much better than the rest of the world right now. You know, we're the strongest of in a bad neighborhood, but it ain't so precious here in the U.S. for a lot of people. Okay, so weaker dollar. You know, China's strengthened a little bit, but I think, you know, the other thing I want to mention about energy is, you know, because this boom is, or this little run is going on forever. There's a lot of people saying, all right, Howard, you know, Shopify's had a good run, or Disney's had a good run, or Apple's had a good run, or Tesla's had a good run. Let's do what are the Chinese versions? Because that's been kind of like the go-to strategy, you know, as you kind of have a good run in the US. So I was taking a look at for example, Tesla, all these people that are stuck in this NIO, the Chinese version of Tesla. And you can see here, and pull that up, you can see Tesla all-time highs.
Yeah.
And so I think you're going to start seeing a lot of people, you know, chattering now about NIO. I see it again, but you can see how people have been buried in playing that, in that kind of, oh, you know, let's find the Chinese version. It's not quite that simple all the time.
True. Even if you look at Match.com and the Chinese version, Momo definitely doesn't look as good as Match, which is recovering on the right side, almost near all-time highs. The same for Shopify, near all-time highs, and then the Chinese BZUN struggling.
Well, I think what people forget is they're just trying to pick one ticker. China's got like 900 competitors for every digital vertical.
Yeah, the only Chinese company that's done well this year is Alibaba, which is, you know, back near all-time highs.
Because they own e-commerce and they own finance with Ant Financial, and Ant Financial just partnered with Vanguard. So, you know, Baba is kind of like the JP Morgan and Amazon and Visa of China. There's, you know, they have competitors, but they're just so dominant, and they are the bellwether of China. So China is doing well, but you got to remember at the vertical level, there's just thousands of competitors for everything. You know, US is competitive, and Chinese companies are competitive with US companies, but intra-Chinese companies, Americans just don't understand how to dive deep enough. So, you know, if you can't find US stocks in a bull market and you got to go elsewhere, then you're making things too complicated. So what we have, Ivan, obviously, is like you said, is, you know, and we've been bullish here, is just things continue to trend higher.
And so keeping in mind that what you just said, if the US dollar weakness persists, we might see a comeback also in emerging market stocks, which kind of includes China, and it also includes Latin America and many other countries. So I would keep an eye on names from Brazil, Argentina. Look at Brazil breaking out here.
Yeah. I mean, I'd have to look up the components, but you're right. Brazil looks great. And some of the payment stocks, STNE.
Yes, it continues to set up near all-time highs. For me personally, currently, the best looking setup from Latin America is Mercado Libre. Here we go. So this weekly chart working on.
There's so many great U.S. stocks. You know, if you've got to own foreign stocks right now, listen, we may rotate and U.S. stocks may top tomorrow. But what I'm saying is, you can only follow 15 or 20 stocks in a portfolio, and in a perfect market, maybe 25. Like right now, I think I own 23. But like, you know, I even had Tencent wasn't working relative to all the companies that have been working in my portfolio. So again, you really got to be either trading and swing trading like you do, or really lazy to be in non-growth American stocks right now.
So what are your favorite American stocks right now?
Well, I mean, they're long in the tooth, but obviously Lulu, Apple, Nike, Google.
I mean, would you buy them at these levels here?
No, but I don't have to buy them. I mean, I've been riding them. No, I wouldn't buy them, because these are 8 to 80 companies that you buy when they're down 30% or 25%. But, you know, we were talking about, Well, you don't know the ticker symbol yet?
I know it.
Apple was acting well through this whole tariff thing, which was the clue, the semiconductors and Apple. I think the two things we talked about through that whole trade war all year, you and I, was that why are the semiconductors doing well and why is Apple doing well? Either they've got their own side deal, and it seems like Tim Cook had played Trump pretty well through this whole thing, or we're missing something. And who knows if there's really a signed trade deal? Who knows what we can believe? But based on the price action in these stocks, I'll give you kind of an opinion. If we look at Apple and Salesforce, like pull up CRM.
Yeah, actually, I like CRM. It's setting up for potential breakouts. So,
but I don't want to own it. But let's take a look at the cloud. Let's look at the monthly Ivan of Apple, and just two companies that everybody's heard of and maybe owns. But you can see 08 stocks up, I don't know, 50 times. Okay. Apple since 08, Ivan. 08, so the last 10 years up,
15, I don't know, 20
times. Okay, so these were companies in 08 that everybody knew, correct?
Exactly,
so,
yeah.
Okay. And then we could throw in Amazon. So those are the three poster childs to me, forgetting Facebook and Netflix of the last 10 years. Why? The cloud and iPhone. Right. So if we really look back over the last 10 years in tech, okay, and the next 10 years maybe biotech and taking the cloud and AI, and because I'm trying to think further ahead. So if we look at this last year and look at Salesforce and Apple, which have hung in there very well, and these seem like old trends, right? The cloud and iPhone seem like old trends. But what if the market's telling us that we in 2029 we're still going to be holding some version of what an iPhone looks like in our hand, and in 2029 we're still just talking about middle innings for the cloud. So I think, forgetting valuations for a moment, I think people are complicating things, but I think the two biggest ideas for the next 10 years are probably still the cloud, and the second one being the smartphone, maybe not the form factor of the smartphone, but obviously what goes inside that. And that's why semiconductors, the phone may look the same or a little bigger or a little smaller, or maybe a flip phone, but we're living with that second screen. I'm talking to you right now, and there's a rare time where I don't have a second screen open. It's just you and I chatting about the markets. But I've been home for 6 weeks, bored and trying to work, watch Netflix, talk to people, and I've had like 2 or 3 screens going all the time. So I think cloud, iPhone, are in 2029, those are still going to be the mega trend. Now, that I think if you add semiconductors here, what goes in that iPhone and what the components of that iPhone are, what's war zone. And that's a harder war zone to win, and it's much more volatile because you're subject to what Google at Android and what Apple, who they pick to be inside those products, which is why generally I prefer not owning component stocks. So those are the, as I think through things, those are what worked for the last 10 years. It's hard for me to not continue to believe will continue to work for the next 10 years. Now, I can't believe how many smart people have now started talking about healthcare and biology and biotech. And, I must have ordered 8 books on healthcare I'm not sure I'll read them all, but like how many of my friends are reading healthcare and how many VCs, younger VCs are talking about software and healthcare and biology and food. So I think, it's not going to be just own Apple and Salesforce. There's going to be a lot of mega winners, but in terms of the mega trends, I don't see much changing. So I think, that's the way I'm kind of seeing things. Now I want you to go through, Ivan, some of your ideas in the SL50 and.
Yeah, the momentum 50 list. Sure. I mean, personally, I think that currently the sentiment is at extreme level, so I wouldn't be surprised if we see some form of pullback in the indices. And in a bull market, it's completely normal to see a pullback to a rising 20-day moving average, which currently the S&P is pretty far away from it.
Yeah, that would spook a few people, huh?
I'm sorry?
That would spook a few people, 5% sell.
Oh yeah, I mean, people have become so complacent in the past couple of months. Everything has been so easy that even a 2-3% pullback might seem like a panic sell-off to some people. And look at what's going on in biotech, for example, which has undisputedly been the leader for the past 2-3 months. It's back near its all-time highs near 100. We're talking about XBI, the biotech ETF.
Yep.
And then last week, for the first time in a while, it had a reversal. So I think we do have the ingredients here for a slight pullback in the biotech. I wouldn't be surprised if you see a pullback towards 93, 94. Of course, if you're a long-term investor, that would be irrelevant. This is only important if you're a swing trader.
Yeah, and I think nothing scared this market, meaning with rates low, there'll just be money rotation, right? There's confluence of like, I can't wait till Jan 1 to sell a little more of my winners, push off taxes a year, but I'm not looking to remain in cash. There's 4 or 5 ideas that I'd rotate back into, or stuff that I took a loss in that in 20 days I may be adding back to my sheet. So it's not like I'm kind of rooting for a pullback, but at the same time, I
think everyone is, and a pullback would be a buying opportunity, and I think we might not see it, but even though the sentiment indicators show that we are due for one. But
you mentioned sentiment, Ivan. I sent you that chart. That was an interesting chart by Sentiment Trader.
Yeah, just
There's
give
no
me a second.
crazier sentiment chart than this. It was really interesting. Yeah, this was. This is positive tweets about the market, or gloating by Orange Julius, and you can see the last time it got this exuberant was the end of 2018. I remember that time, and it was just, whew, that was a tough year following that. And you can see, I think this is a really interesting chart. I mean, picking tops is not something I want to do. I've just lost too much money over the 20 years doing this to care. But and I think going back to that chart, Ivan, I think it worked better at the extreme. Look how negative he was, and like how grumpy he was at the end of last year, blaming the world, and blaming everybody for his wrong, which he's always going to do, right? But how he dropped caring about the market when the market wasn't doing well, and that was a better indicator than the amount of times when he gets bullish. But you can see, like, in terms of sentiment, Ivan, odds favor some kind of, sideways to pullback market.
Yeah, I mean, keep in mind that in bull markets, correction often happen through sector rotation. So we might see, for example, some weakness in biotech, but then strength in, let's say, retail or consumer discretionary or consumer staples. So we see those types of rotation all the time in a bull market. So we might see some more significant sector pullback, while the indices like the S&P 500 just remain in a sideways range. And speaking a few setups that I like us in software stocks, CRM, setting up a potential breakout. Here's another one, ServiceNow, setting up here again. I think it's working on the right side of its new base. Splunk, working on.
You brought up last week. I have a few calls, spec calls that I put.
They tried to break out. On Friday they pulled back. Another one, Universal Display. They finally had a big breakout last week. I still think they will test their all-time highs here near 230. So in payments, Visa and MasterCard obviously continue to do well, but I currently, as a setup, I like PayPal. I think, look at this tight range consolidation right above its 200-day moving average. I think it's setting up for a breakout above 110. If it clears 110, I think we might see a quick move towards 115, and then from there, eventually testing its all-time highs near 120 if the market continues to be strong. And here's the weekly. Here you go. It's tight range consolidation above its 50-day.
Mm-hmm. Yeah, I think just if I'm in that space, I'm going to I've owned that stock before, but I just think it's just such a big company and such a big market cap. It's going to be tough for that stock to really move around a lot. The one that was interesting to me, well, let's go pull up the list, Ivan, and see kind of what other, if there's anything sneaking up.
All right. So one last time, before we close down Market Wisdom, let me pull up the.
But you're going to keep the list somewhere for us.
Yeah. I mean, the list continues, and actually, if people want to get the top 5 stocks from the Momentum 50, they can just sign up for my free email. I think I shared Twitter and StockList, so people can at least get the top 5 for free. And
so they're shot. DocuSign's back. Fiserv, Coupa.
It's been on for 11 weeks.
So it's software.
Finance. A few biotechs were dropped out this week, so definitely we're seeing withdrawal in biotech. But software, a lot of software. I think Meli is back on the list. Some semiconductors, some medical devices, and Chipotle is kind of consolidating near all-time highs.
It's been the best restaurant.
Tesla, this is the 8 week. It will be their 8 week. Here's a new name, RNG.
Ring Central is just loved by a lot of corp dev people that I know in enterprise software. Never was on my radar, but it's just been one of those great.
It looks nice. It looks beautiful here. Look at that tight range consolidation after the big volume.
One of those names no one in Main Street follows it, but all the enterprise people love that company, RNG.
Yeah.
So,
REIT is an interesting biotech, even though right now I think biotech might be in a pullback mode.
I've seen other people talk about IPHI, which is another semiconductor stock.
Oh, yeah, sure. Yeah, they're consolidating all-time highs. Try to break out on Thursday. If the general market
really the same, semiconductors, software, select software. What was your worst? Let's go through a couple bad ideas. My worst idea, I think, of the year was Elastic, which
I mean,
I miscalculated how much Amazon and Mongo companies have done great, and it's just that overhang of open source software getting competed from Amazon and other open source companies like Mongo. So that was probably my worst idea of the year. Do you remember any bad ones that you had, Ivan?
Zoom, I think. Even though I trade them, I didn't really hold it long term, but I lost money on it a couple of times.
I own it right now. It doesn't look like it's going to go anywhere, but we're using the product. We love it more than we did anything else, right?
Yeah, that's absolutely. The product is so easy to use. That doesn't mean that the stock will do amazingly. Look at that.
No, not at all. Yeah, I have a tiny position there, but mostly to follow it. But when I love a product that much and it's down 30%, I'm not scared of trying it. All right, what are you going to do for New Year's?
I'm going to a party.
That's very vague.
Here in San Diego, yeah. What about you?
Sex party?
No, just a normal New Year's party.
Those parties like you millennial where you just throw your key into a hat at the beginning and then everybody leaves with a different key?
No, these only happen in Phoenix. No, they're not popular here.
They do happen in Phoenix with, I think, people in our age group actually. Just I would pull a hamstring. I can't go to parties like that. Okay, a couple other ideas I want to share. Facebook looks really good. I mean, it's so hated.
All right, let me pull up Facebook here real quick.
it's just so hated, including me. Like I opened up Instagram today and it's almost like worthless to me. It's like my phone's listening to me. My daughter and I were talking about credit cards yesterday. My daughter wants to get a credit card. And today on Instagram, I opened it up and I got like 900 startups pitching me, start earning credit.
Yeah.
There's no way, no possible way, because I didn't click on any links on the internet the last few days.
I'm surprised it took you so long to figure that
No,
out.
I've known that, but you hate believing it. But now my daughter and my son believe it happening too. So no one seems to care. And with all that negativity baked in, and Sheryl and Zuckerberg being the devil, boy, that's a good setup.
Yeah, in a strong market, of course, the large cap, high growth stocks will look as good as Facebook.
It feels like there's a surprise coming there, and maybe it's just because they got so many ads and political ads, and they're just going to throw some outrageous profit number out there, especially international. But that just seems coiled.
Is Amazon your other idea?
Yeah, I'm super bullish. I was buying some on Friday or Thursday, and it just kept going up on the gap above 1830. I think I paid 1840, but I've owned it forever. It's kind of a throwaway year and a half. But in the sense it's digesting just massive, gains, which is not negative at all. And there's no competition. And then, obviously Shopify, because Amazon can't compete with them. There's really, Shopify just continues, they could do a couple acquisitions. I know Squarespace is going to get public this year. But like, if you have to, like I was saying this to some of my readers this week, if you have to, there's two things you need to own on the internet. You kind of learned this over the last few years. You got to have your domain, you got to have a website, and you have to own your email list, right? Because if you do it on Facebook, you own nothing. And if you do it on Twitter, you own nothing. And if you do it on Snapchat, you own nothing. But if you do those things yourselves, you're pretty much in control. Listen, the world's eavesdropping, but you're pretty much in control. And with Shopify, it does both, right? You own your email list. Shopify does let you have your lists, and you have your website and your e-commerce website. So at least in the US and wherever they're growing into, they really solve two of those things. And they're the anti-Amazon, right? They're they're the opposite of Amazon, because they allow people to set up their stores and they allow people to market themselves on Amazon. So,
the question is how many people are still using websites and email versus how many people are actually consuming content on social media. So
both growing, and maybe not at the rate you expect. This goes back to, the cloud and the iPhone, Ivan. It's early days. So, is it at the same rates of growth as before? No, but as people come off Facebook and start learning about doing this themselves and controlling their destiny on the web, those are all people that could be Shopify people, or Squarespace, which isn't public yet, or WordPress, or all these companies, Wix, where people kind of control their own website and email list. All right, buddy.
All right, that's a long show. I hope everyone watches it until the end.
Okay.
All right. See you.